Securities offered through Cambridge Investment Research Incorporated, a broker-dealer, member FINRA, SIPC. Advisory services through Cambridge Investment Research Advisors Incorporated, a registered investment advisor. Cambridge and Clear Vista Financial are not affiliated. Discussions in this show should not be construed as specific recommendations or investment advice. Always consult with your investment professional before making important investment decisions.
All right, welcome everyone. Well, Proverbs 13, 11 through 12 says, dishonest money dwindles away, but whoever gathers money little by little makes it grow. Hope deferred makes the heart sick, but a longing fulfilled is a tree of life. Hi, folks. I'm Certified Kingdom Advisor Mark Trice, and I want to welcome you to the Spend Life Well Show, where we apply biblical wisdom to your financial life. You can call us anytime with your questions at 254-282-0495, or you can also send us an email at radio@spendlifewell.com. We'll respond to you on the show or perhaps within 24 hours if we do not have a chance to answer your question on the show. I'm joined in the studio today by my fellow co-host, Jesse Hamilton.
Hey, welcome to the show, everybody. How's it going, Mark?
Well, it's been a kind of an interesting week.
Yeah.
Kind of volatile in the markets. We ended the third quarter with kind of a thud.
Yes, we did. We're going to talk about third quarter performance later in the show. I'm
Yeah,
excited
that's
to
right.
bring up those numbers.
So give us a call, folks, 254-282-0495. We'll try to make sense of what happened in the markets. We'll talk a little bit about managing and being a good steward within the household as married couples.
Mm-hmm.
And then also we will talk toward the end of the program, some of the biggest money wasters that we see a lot of people making mistakes with. We want to pass those along to you as well. So Jesse, you're getting into the subject of the main conversation today from Proverbs. We talk about hope deferred makes the heart sick, but a longing fulfilled is a tree of life.
Mm-hmm.
And we want to talk about investing in your financial hopes.
Okay. That's a
Now,
great topic.
This may be, a new topic for a lot of people, but we talk about, that last verse talks about the life that comes from a hope of being fulfilled, and often the discouragement of an unfulfilled hope. And so we're talking about, how does that relate to your spouse?
Mm-hmm.
Jesse, you're not a newlywed anymore. Y'all have
Yeah,
a few
actually,
laps around the track.
Yeah, we're getting close to our third anniversary, Mark.
Wow.
Yeah, I know. But it's been an awesome 3 years so far. Actually, the very beginning of the Spend Life Well show, we had a special marriage talk, and I invited my wife on, and we talked about what it's like to be brand new newlyweds. So it's full circle here to be a couple years down the road and kind of revisit that topic.
That's back when we were doing a podcast.
Mm-hmm.
Isn't that
The
right?
origins of the show was
That's the origins of the
a
Spend Life
podcast.
Well show. And so
Right.
I think, there's a lot to be learned. I'd be curious to know. Maybe we should have Emily on the show again.
I'm sure she would. We've definitely grown in our marriage since then.
Well, let's talk about this first. Now, how do you all handle? Do you all talk about your goals and your dreams and stuff?
We need to be better about doing that. But yes, we do. We should be doing that on a monthly basis or more, having those intentional conversations. But yes, we do. We talk about where we want to be and what our goals and our intentions are in the future, and how we can give more and be great stewards of what God has blessed us with. So, what about you, Mark? How often do you have those conversations?
Well, I don't know that we have them that often, but we do talk about, our short-term and long-term goals
Mm-hmm.
quite a bit. I think, though, and maybe you and Emily have gone through this. Certainly, Holly and I have gone through this over the years. And when we have to think about what are our goals as a family, as a couple, Because when you first get married, you're like, I got my goals, she's got her goals,
Right.
and hopefully they match up. And if they don't, a lot of times, and I'm just saying for the fellas, I'm not going to speak for the ladies, and you're welcome, ladies, if you're listening to the show, you want to text us at 254-282-0495. Send us a note and see if you agree or not. But oftentimes I can't, my earthly desires were the ones that I wanted,
Hmm.
and it may or may not have aligned with my wife's desires and dreams and goals. And I think as our attitudes towards money and submission to Christ about how God wants us to manage our money changed our viewpoint towards things.
Okay.
And so a lot of times, Jesse, because I love my spouse, I'm going to try to fulfill her hopes, her
Hmm.
wishes, her dreams. And those are more important to me than my own sometimes. When we were first married, it was very much about, I want this. I know you want this, but I want this.
Hmm.
And it was more of a battle, right? It was more of a contest. Who would win? Who would win, me or my wife? And I was a pretty good debater in college, okay? So in high school, and I knew how to win an argument.
That's maybe some confidence you don't want to bring into a marriage.
Oh man, that was so stupid. I mean, it's so stupid. What I didn't realize was by having that confidence to being able to win an argument, I was just basically deflating my wife. I
Hmm.
was crushing and suppressing her hopes. And it took me a while to figure that out. It took me a while to figure that out. So sometimes, Jesse, I'm kind of I'm not a big guy, but I'm taller than average, and
Yeah.
you know, um, I could probably take you in a wrestling match. So, one of the things that I had to learn to do was to not crush my wife's hopes and dreams. And this verse in Proverbs really speaks to that, because I was really making her heart sick by not including her goals and dreams into what we wanted to do. It
Right.
was all about, what did Mark want to do? Mark wants to do this. Mark thinks about this. This is what I should be doing. And I just want to share that with our listeners, because maybe you're in a situation, you're having conflicts about money with your spouse and you don't agree on what should be done, or maybe you just don't know what to do. And so you feel like that your hopes are being kind of crushed or sucked away. And that's one thing that I really want to make sure that our listeners hear is if you're in a relationship, you're married, that's really about financial wisdom, applying biblical wisdom, especially in the context of this verse in Proverbs, is about fulfilling our spouse's hopes. And my attitude towards that has changed over the years. I don't know whether I've mellowed out, or maybe I figured out that even though I was a great debater, I could actually never win an argument with my spouse, right? Because if I win, our marriage loses.
Right.
Does that make sense?
Yeah, that makes sense to me.
So
It
so
might
as
not
you
make sense to maybe somebody who isn't married. It's a confusing topic, and it's an image of selflessness that is hard to accept and not normal.
Yeah, but when we have Christ in the center of our relationship, and we want to follow his wisdom when it comes to our finances, you have to look at what's best for you as a couple, not what's best for you as an individual.
Hmm.
And so it's kind of one of those things, and it ties to money in this way. In Hebrews 13:5, um, keep your lives free from the love of money and be content with what you have, because God has said, never will I leave you, never will I forsake you.
Hmm.
And I'm reminded of that verse because it's God's love is perfect, and his love and presence are among some of the greatest gifts we'll ever receive. So, as an individual, I need to strive not after money, but to seek the contentment and joy in the presence of God.
Right.
And when it comes to talking about things, and I'll give you some examples, there's one of the big challenges that we had, not early in our marriage, we'd been married about 10 years before we started deciding to have children. But I kind of suspected, because, I love my wife, I'm listening to her heart's desires and things. I kind of suspected that after we had our first child, after she was born, that my wife may want to stay at home and not go back to work. Well, Jesse, that's like cutting your income in half.
Mhm.
And we had, built up a dual income, no kid kind of life. And are you familiar with this? Dual income, no kids?
Yeah, I am.
So dual
DINK?
income, no kids. It's fun. I'm gonna tell you, because you got two incomes. Maybe you've paid off your debt, and heck, you can do almost anything you want to, right?
Right.
Go on those last minute weekend trips away or things like that. Have money to be able to board the dog or have someone dog sit old Bean over there, right?
Right.
And so you really don't think about those things because there was always plenty of money. And then your wife comes to you after about a month or so of after our first child being born. She says, I can't put our child in daycare. What do, Jesse?
Well, you have to align those goals and hopes and dreams and have those difficult conversations, because I I really like these verses that we've brought up so far, but they don't lay out the step-by-step process of taking God's perfect love, which is our gift, and then deploying that in a practical sense in quite literally dollars and cents in the household.
Yeah. I mean, I'm sitting here thinking, it's like, hey, but I wanted a boat and we can't afford a boat on one income.
Right.
And sometimes those those decisions that you make as a couple may cause us to have to postpone some of those individual dreams and goals. I really wanted a boat, right?
Mhm.
And I knew that I would have to sell that boat if my wife decided that she was not going to go back to work. And that was a very sad day for me, right? 'Cause,
Right.
but
Well, I mean, we laugh about it, but really aligning those goals is extremely difficult. And different spouse can have different priorities and values. And um, I appreciate you sharing that story, because I'm sure the listeners are facing problems, not problems, but decisions like that every day.
so how can we as couples align our financial priorities and values together? How do we do that?
Well, in uh, Ephesians chapter 5, verse 21 says, submit to one another out of reverence for Christ. So,
Yeah, and I know a lot of people, some people get offended by that verse, that
mhm,
especially in Ephesians 5. But when you look it into context here, submit to one another out of reverence for Christ. And really what that verse is saying is talking about laying down our individual desires, submitting to our spouse's desires to strengthen our relationship in a way that
mhm.
honors God rather than what our desires are, right?
Right. It's moving beyond personal desires and really being able to live your life for something greater than yourself, which is a fantastic idea, but it's really hard for the individual to get there.
Yeah, because we've got to give up the me, right?
The me, yeah,
I gotta
not
give
the
up the
we.
me. But the same thing is true with us as individuals or whether we're married. If we want to follow God's plan for our finances, we have to give up the me.
Mhm.
We have to give up the me and focus on the we. And if it's in the context of a marital relationship, it's my wife, myself, and God.
Mm-hmm.
It's three of us. He's in the middle of it, and it's all about the we. And when you look at it that way, is what is God wanting for our relationship, our family? Then things become a little bit more clearer.
Right.
And we don't want the me goals. We don't want the me goals to get in our own way, but we want to use we, God in the middle of that relationship, to be united as husband and wife
Mm-hmm.
in the stewardship of the finances that God has entrusted us with.
Well,
And I think,
something. Sorry, go ahead.
no, go ahead.
I just think it's amazing that this picture applies. Everyone thinks this applies to your spiritual life and your marriage, right? That's great. Submit to your spouse's desires, their hopes, and their dreams. But this is a financial show, and it's amazing how we can apply that all the way down the chain to our financial lives.
Absolutely. And I think that a strong marriage is a strong financial picture, or at least the ability through with God's help to work through any type of financial crisis or anything like that. And I think that's so important as, and we'll talk more about this in the next segment, but I think it's so important that we come together as couples and do that. My attitude's completely changed. I still have the me moments, right?
Mm-hmm.
I still
Yeah.
have the me moments, but I want to focus on the we, and that's my wife, myself, and Christ in the middle.
Mm-hmm.
And so I think our attitude changes, and it makes it a whole lot easier to try to honor and love my wife and trying to fulfill her goals. And she's got a lot of goals that I want to try to fulfill. And I think that scripture is really important. Folks, when we come back, we're going to talk a little bit more about this. We'll get into the market update and also talk about some of the ways that we may waste money.
Mm-hmm.
You've been listening to the Spend Life Well show. We'll be back in just a moment.
Welcome back to the Spend Life Well show. This is Jesse Hamilton, and I am joined, as always, by Mark Trice.
Happy
Our
Saturday.
happy Saturday, everybody. Our verse that we started off this discussion today with was Proverbs 13:11 and 12. Dishonest money dwindles away, but whoever gathers money little by little makes it grow. Hope deferred makes the heart sick, but a longing fulfilled is a tree of life.
So we've been chatting about fulfilling the hopes of our spouses, and talking about how, at least in my personal situation, I feel like I've gone from more of a me to a we
Mm-hmm.
over the years. And Jesse and I were talking about the decision that my wife and I made for her to stay at home and run the household. Um, some listeners may feel like that's an easy role, and it's not. It's a very very difficult role. Uh, my wife has to be on 24/7. Now we not only just have one child, we've got four
Mm-hmm.
children since we made that decision, and I think it's been the best thing ever. But we had to come together financially to agree on what were the priorities, and that meant giving up some of the things that I thought, and this is the me talking, I thought were important. Like
Mm-hmm.
I thought it was important that we have dual incomes, two incomes, money coming in the house, and that's enjoyable. It was to fulfill my earthly uh, desires of the flesh. Okay,
Mm-hmm.
and I talked about, I didn't want to give up my boat.
Right.
It was
Well,
a lot of fun to have a boat, but I knew I'd have to give it up eventually. I knew it would change the type of house that we lived in. We probably have to move into a cheaper house. In our case, we actually made the decision to move from Washington, D.C., a very expensive area, back to Austin, Texas at the time, less expensive area.
right.
Not so much now, but 20 years ago that was. And it was a big decision, and it took some getting used to. And God had to get me comfortable with that, to let me know that He was going to provide for everything that we needed. It may not be what everything I thought we needed, and submitting to that, as submitting to my wife, as it says in Ephesians 5, submitting to one another out of reverence for Christ. If we put Christ in the middle of our relationships, then it's almost like you've got that third party arbitrator there to help
Mhm.
navigate that for you, so we can clearly see what's best for us as a couple, what's best for us as a family.
Right. So, yeah, yeah, I think that's a lot of wisdom, Mark, there that our listeners can learn from. But you were talking earlier about you mentioned dual income. So our household does not have the choice currently about we've pushed back at least having kids for now. We plan on doing that later, but um, as far as our budget, after we've given and saved and done all the things that we teach here on the Spend Life Well show, we do have that amount of extra income for spending on things that we like to enjoy. So our on a much less important decision for the household, but is what to do with that extra income left over after giving and saving and all that.
So how
But
do y'all come together on that? Or do you just say, "Here's yours, here's mine,
no,
knock yourself
well,
out"?
partly. We've
Oh,
had
I remember
to
those days.
meet in the middle several times. My wife's priorities for extra income is travel. She loves to
Okay.
travel,
She likes the
and I like
experiences.
I like to travel too, but she likes the experiences.
Uh-huh.
And so her big dream is to go to Europe. And so we have been saving for a long time to try to make that happen. And Mark, my hobbies are wheeling and dealing. So I like to
With
have
wheels.
with
R
wheels, yeah, with actual cars. I'm talking about.
Right, right.
So
We don't wanna
co-
think that you're as an financial professional that you're a wheeler and
no,
dealer. We're
definitely
talking about
not.
automobile folks.
This is on a non-professional level, Mark. But
Yeah.
yeah, I have my toys and my projects. I work on them, I flip them, and it's a hobby of mine. So that takes a lot of capital to keep that hobby going as well. So we
Mhm.
have different opinions there. But over the past year and a half, we have had a lot of those conversations about how to mediate it, and I think we're doing a pretty good job of letting both of our interests happen. So
So what you're saying is she's not always on board when you buy a 1975 truck or something like that?
not always.
No? Okay. Alright.
So there's a lot of discussions around that, but we are planning for a big trip that we've been had in the works for over a year, and so we're excited for that. And we've had those mediating conversations. This is all on a much lighter note than deciding if a spouse is going to stay home from work to raise a family, but I thought I would bring it up.
Okay. I think that's good for you to share. Thank you for sharing that. And I think, one as my wife and I look back on, uh, that decision for her to stay at home, it's sometimes it's a routine thing where we have to make choices. We have to give up this so we can do that. Or we've got, we got to buy shoes for the kids or whatever. And may have to give up, going to an overnight date night or whatever.
Hmm.
But that's okay, because we come together, we know that we're doing this out of mutual respect and reverence for Christ, that these are the choices we have to make. And by the way, if you're thinking right now, you're contemplating maybe having a spouse stay at home to raise the kids while they're young and stuff, man, I can't endorse it enough. And I just think it makes a huge difference in the lives of your children if you're able to make that sacrifice. And it is a real sacrifice
Hmm.
to be able to do that. But I wouldn't trade that for the world. And we still got kids at home. We got one in college right now, and I wouldn't change that for anything. So if you're thinking about that now, know that we're praying for you as a listener and as a family, that you'll be led in the right decision for that's best for your family. And it may be to continue working, both spouses working. That's
Hmm.
okay. But if you're struggling with that decision right now, I can tell you, you do have to make some changes. You do have to make some sacrifices, but it's so worth the investment, the sacrifice, and investing in your children and stuff. So, anyway, Jesse, thanks for your comments and sharing with us there. Let's jump in and let's get market update for the end of the quarter.
Okay. So as of September 30th was the close of quarter three of 2022. So
Was
let's
it rip roaring, a big roar of a lion or the bull market?
uh, absolutely not.
Oh,
So let's talk about performance year to date as well as the quarter to date for the third quarter. We'll examine the four indices that we always talk about on this show. The first being the S&P 500, large
yep.
cap stocks in the United States. The
It's looking
index,
pretty good there in the first month of the quarter, right?
it
Through
really was. It was right. It was going up,
Uncle
and
Jerome had to give a speech in Jackson
and then,
Hole.
yeah, buddy J Powell decided to give that speech and it really turned things around. So for
Why
that
why
core,
was why was that, Jesse? What did he say that made everyone scared?
well, everybody was just buying into the market, watching it go up, thinking the Fed was going to be easy going. And Jerome confirmed and said over and over again that we are very serious about uh, taming inflation and changing the rates.
It's kind of like the Little Red Riding Hood, or no, the Boy Who Cried Wolf, right? Because
Mm-hmm.
for the last decade, the Federal Reserve has been there to prop up the stock market, and every time things got a little choppy in the stock market, the Fed would step in and provide some type of stimulus or reassurance that they were going to cut rates or anything like that.
Right.
In August at Jackson Hole, the Federal Reserve Chairman Jerome Powell, we call him by all sorts of names, J Powell, Uncle Jerome, but he came in and said, "Hey, folks, we're serious. We're going to keep raising interest rates until inflation is nipped in the bud," as
Mm-hmm.
Barney Fife would used to say. So how did the quarter end for the S&P 500?
So we saw that run up and then that extreme decline. So actually, for the quarter, the 3 month quarter, it was actually only down 5.28%
Hmm.
from its start there. But
Okay.
year to date, it closed the quarter at minus 23.85%,
Okay.
and that includes a new low of 3,585. The close on Friday,
That was
September
important.
30th.
Right. We were hoping it would not surpass or go below that level from the lows in June.
Right.
Because if it did, that would signify some type of breakdown from a technical perspective
Mm-hmm.
that the market has lower lows to put in.
So we've seen some wavering since then, but the outlook and the overall trend is definitely negative.
Yeah, it's still so important. I mean, you've got all the talking heads on television saying buy the dip, the bottom's in, and it's so important to be patient
Hmm.
with your money because you don't want to get sucked in. That's what they're hoping. They're hoping you get sucked in, and hopefully that will prop up the markets a little while longer and maybe even cause it to rise. So we may have a little bit of a rally here. We've had 3 of these bear market rallies this year alone, and they are just when you have a sell off, you have a little bit of a bounce because there's exhaustion in the selling, and things may be oversold. So you have a little bit of a rally. I would not be surprised if we go up a few percentage points off of that bottom before we turn lower,
Hmm.
but we don't have a crystal ball. We don't know what the future holds. We just simply have to respond to the data that we're giving and know that if you've got a good financial plan, you're going to get through these scenarios.
Right.
So, how the Nasdaq do?
The Nasdaq was down 4.11% for the quarter, and on Friday, that year to date number was 32.4% down.
Ouch!
Ouch
That's
is
and
right.
that's not even from the peak, Jesse, because the peak for the Nasdaq was back in
And
November.
it was in November, early
This is just
November.
year to date numbers. So that peak to bottom number there is probably a lot larger than 32%.
Correct. Yeah.
So people are going to open their third quarter statements and probably be surprised as to how much their portfolio has gone down. So don't
Hmm.
ignore those. Don't stuff them in your junk drawer. Make sure you open them up. Talk to your financial advisor. If you need a hand, you can give us a call at 254-282-0495. We'll give you a complimentary portfolio evaluation. We call it the Am I on Track
Right.
meeting. Doesn't cost you a thing, and we'll give you some information. You can go back to your financial advisor. You can take it and do it yourself. but we'd be happy to provide you that second opinion on your portfolio. 254-282-0495.
So
Jesse, I
let's
know the NASDAQ or the NASDAQ's down quite a bit. It's probably the worst. What about the Russell 2000 index?
Right. So this is small cap companies, the Russell 2000, minus 2.62% for the quarter,
Okay, not so
but
bad.
not so bad. But that's because of the same pattern in the trading throughout those 3 months. It went way up and then it went way down. So year to date, that closed 25.86% down.
And we generally see what the small cap indices do. It kind of drives the whole market. So,
Hmm.
we saw a big run up in July, only to have that precipitously fall off in the second half of August through September.
Correct.
And then what about the safety net, the safe place to be when you don't want to take too much risk with stocks? What about bonds?
Mark is saying that sarcastically.
Yes,
Um,
I am saying it sarcastically and
uh,
cynically. I mean,
minus 10.89 long-term treasury
for the
index
quarter, that's
for
the
the quarter.
bonds.
That's the bonds. But the number that's going to shock you here, Mark, is minus 30.87% year to date.
But I thought the bonds were supposed to be safe.
And
That's what the
believe it or
financial
not,
industry tells us. When the stock market goes choppy, the bonds are a safe place to be. But they've actually done worse than the S&P 500.
right. And the yields are going up, but not even close to be covering these type of price losses.
Yeah, but when a yield goes up 1% in a long-term treasury, the value of that treasury that you own will go down 5%.
Hmm.
So you may be clipping a little bit higher coupon from that bond, but the value of that portfolio is going down rapidly.
Hmm.
Will we see some relief soon? I hope so, but we don't know what the future holds. So, many of you hold a typical 60-40 portfolio, 60% stocks, 40% bonds. The bonds are what's hurting your portfolio the most this
Right.
year. So make sure you're checking in on that. Maybe it's something you need to talk to an advisor about.
Well,
Jesse,
Mark,
yeah,
that
go ahead.
that that brings me to a great question that was asked from a listener relating to the 60-40, and that is, I hear all this negativity. I hear that the 60-40 is dead. What is my alternative? Should I just sit in a bank account?
No, well, we believe that you need to talk to a financial professional that uses active risk management and technical analysis to manage your portfolio. The larger financial industry really strives on trying to make things simplistic.
Hmm.
And for the last decade or so, well, even longer than that, last 2 decades, it's been the 60-40 portfolio. And that's because we've had falling interest rates, and to a point, the value of those bonds were going up, and we had a healthy stock market. And so those two things have really gone away. You have to ask yourself, do I want to be parked in this type portfolio and lose 30%? Most of us would say no. You need to get a second opinion. That's why you can call us at 254-282-0495, or you can go to spendlifewell.com and request a consultation. We'll give you a second opinion, let you take a look at that. We'll take a look at your portfolio, give you some suggestions, and send you on your merry way. If it's something you'd like it to help you with, we certainly can talk about that as well. Jesse, this has been a good update. I know there's still a lot of instability out there. We'll
Right.
continue to update you and our listeners. Folks, when we come back from the break, we'll talk about some of the most common wasters of money that we do. You've been listening to the Spend Life Well Show. Welcome back to the Spend Life Well Show. We've been talking about the performance of the stock markets and things, and how you really need to get a second opinion in your portfolio. Open up those second quarter statements. I'm certified Kingdom Advisor Mark Trice, and I'm here with my co-host Jesse Hamilton.
Hello.
We've been talking a little bit about what the Bible had to say about managing our finances in the context of a marriage.
Hmm.
And I think I would recall back to the verse that we read from Hebrews 13:5. Keep your lives free from the love of money and be content with what you have, because God has said, never will I leave you, never will I forsake you. And just kind of reiterating and pointing out that the best gift we can ever receive in our entire life is the love and presence of God.
Mhm.
And money doesn't really matter when it comes and compares to that. But God had a lot of verses in the Bible, over 2,000 verses dealing with money and possessions, because He knew
We were gonna
that
need
being a
help
good
on it.
we would need lots of help on it. I mean, it's almost as many verses as Jesus talked about love,
Mhm.
and and I think that's really important. But there's a lot of uncertainty out there, folks, and we don't want you to listen to this show and feel anxious because we know that God will never leave us, He'll never forsake us. But we do want to try to give you good biblical stewardship wisdom so that you can manage your finances in a way that's honoring to God and serving Him.
Right.
So, Jesse, the last segment here in our program today, I want to talk about something that actually I was reminded of when I was listening to Monday's MoneyWise program. We're sponsors of MoneyWise here on the Bridge, and we love it. It's one we tune into every day.
Mhm.
We encourage you to do that as well. Every weekday at 3 p.m. here on the Bridge. Austin is a great show with Rob West. Rob will have on guests and different things, and he was bringing up and talking about a Wall Street Journal article back from 2019, where they interviewed a Nobel Prize winner in economics. That's Robert Shiller. They interviewed a number of different financial advisors, and they were talking about some of the things where we can waste a lot of money.
Yeah.
And the idea is here, we just want to share some of those with you because if you don't know about them, or if you know about them, you won't do them. And there's some big ones here. So going back, Jesse, this is the Wall Street Journal survey they did back in 2019, and it's still
Right.
true today, of several experts, and what they considered were big money wasters.
Mhm. Well, it's so easy to compare yourself, whether it's to friends or with social media these days, watching a movie. It's so easy to find somebody kind of like you or similar to you and say, "Oh, well, I need to be better than them. I need to be more like them." And it seems to be a theme throughout this article that that's a big waster of money. Would you
Yeah,
agree?
the researchers called it compensatory purchases,
Yeah.
and that's a fancy name for what, Jesse?
Keeping up with the Joneses.
Keeping up with the Joneses, right, right. And I happen to know some Joneses that go to church, used to go to church with me there in Austin, so I'm not referring to them. But I like some of the things. They have a big family. It's kind of awesome. But we're not keeping up with those Joneses, but the
So that
figurative
that
phrase of the Joneses, right? And
right, that's having a better car out front and a prettier house and, nicer clothes. Um,
because we want people to think we're more successful than we actually are.
right. And
I
and
don't know if you've
people
ever driven through a neighborhood where there was a really nice foreign car in the driveway, but the roof was collapsing. Have you ever seen that?
Mhm,
And I that doesn't send that picture, but we're always trying to keep up with our neighbor, right? And
right.
what's the commandment? Don't covet your
Mhm.
neighbor's wife, neighbor's stuff.
Yeah, that one's early on in the Bible, isn't
Yeah, it is.
it?
It is. So, what are some examples of compensatory purchase?
So, these can be all different ranges of expenses from your coffee all the way up to, your house and everything in between. So, generally, we're talking about big ticket items here that are big money wasters. Uh,
So,
let's just talk
what's
about
what?
sorry?
Let's since Emily's not here. Oh, and I know she doesn't have this purse, but I haven't know. My wife doesn't buy fancy purses. What's a designer purse these days? Do you know?
Uh, well, the gold standard is Louis Vuitton.
Our Louis Vuitton purse. Now, you ladies out there, you'll recognize this, right? If
Mhm.
a friend walks in and she's got to have coffee with you and or lunch and she's carrying a Louis Vuitton purse, you'll notice it.
Yeah.
Us fellows, we'll walk in there and say, we
Brown
won't even
bag.
notice it, and who cares? I don't care if you're carrying a backpack or no purse at all. But there's some people that's a status symbol, right?
Mhm.
It's that denotes that I've made it. I'm luxury.
Right.
Another example, it could be even small item tickets like designer coffee,
Yeah.
right? Um, I don't ever go to Starbucks, not because I don't like Starbucks. I just don't want to stand in line and have someone misspell my name in my cup.
Mhm.
So,
This one definitely calls me out, Mark. I spend too
what?
much money on coffee.
Yeah, you are kind of the coffee aficionado, so
I
you kind of
do
know. Jesse,
I
if you want to know what the best place to go find coffee that week, just send Jesse an email
yeah.
and he'll tell you.
Yeah, so it I'm conflicted there, Mark, because it is something I really enjoy. It's something that brings me joy, but it also sometimes can be a waste of money. So that reminds me how caught up people get in both sides of this argument, where it's okay to enjoy what we've been blessed with, but there are simple ways to not waste money. There's
Right,
two sides
right.
to this argument.
Yeah. So we've been talking about the Wall Street Journal article, and in fact, this article was brought up on our one of our favorite programs that we as financial advisors, the host of this show, listen to, and that's MoneyWise, 3 p.m. each day on the Bridge with Rob West. And the article was talking about big money wasters, and another big ticket money waster is buying too much of a house.
Mhm.
Talk about that a minute, Jesse.
Sure. So it people's houses, it's a status symbol sometimes, depending on where you are in your life. And people always think bigger is better. But a lot of times there's wasted space within a house, whether that's an extra bedroom or, like a basement or a workshop gathering dust that never sees a human being. It's wasteful.
I remember one time we were trying to design a house to build, and we ended up not building it because all the things we wanted to fit in the house cause it to just get bigger and bigger and bigger. And we're like, oh my gosh, we really don't need all those things. They're
Hmm.
nice to have, but they're not a must have. So what about like large elaborate kitchens, for example? I love to cook
Hmm.
and I love to have lots of space to prep and entertain people because nowadays people hang out in the kitchen, right? They come over, your friends come over, you hang out in the kitchen, or you're
Right.
around the island in the kitchen. And
Right.
so that's one thing, but we got all these readily available prepared foods that really you don't need all the space that you used to need to have a big meal and fix a big meal. Which, by the way, those prepackaged foods can also be a big money waster as
They
well.
they can be.
Yeah. So another example of buying too much house is having a rarely used room.
Yep.
That's
That's
an
what I
extra
was talking about
bedroom.
earlier.
Yep. It sits empty most of the time, or a workshop in the basement that just
Mhm.
gathering dust, or space for bookshelves when we have ebooks. I mean, we're using our Kindles these days versus actually picking up a copy of a book or newspapers and things. But that's kind of indication maybe we bought too much house. What about vehicles, Jesse?
Yes, that's a big money waster. I was telling you, Mark, yesterday about an just absurd, stretch of financing that somebody posted online
Oh yeah, tell us
about,
about that. It was funny
uh,
and
it
scary.
it's kinda scary, yeah. Somebody purchased a new BMW, brand new car. It was worth about $90,000, and he was talking about how blessed he was and how, hard work pays off. And then at the bottom of the page, you could see his payment, which was $2,150 per month,
What?
and his financing charge on that $90,000 car was $110,000. So
Oh,
he's gonna pay $200,000 for a $90,000 car.
well, that makes a lot of sense, doesn't it?
And that's just an absolutely absurd, example of that, where obviously people are not going out and doing that on a regular basis.
Dave
But
Ramsey calls that a stupid tax.
yeah, stupid tax.
But
So
really, what's the purpose of an automobile? Is it to
to
impress somebody?
get you to work.
Yeah, it's to get you from point A to point B. And you can even buy that new car smell scent if you want to spray it in your car so it smells like a new car. Um, you know, hey, if you can afford buying a new car, an expensive car, that's fine. No one's telling you can't. But make sure it's something that you're gonna keep for a long time. Especially if you can buy it with cash, that's even better.
Mhm.
Because if we said, if no one bought some new cars, we would have no cars at all at some point, right? Because they wouldn't
Right.
make them.
Right.
But with today's high interest rates and stuff and sky high car prices, have you tried to buy a new car lately, Jesse? It's
Yes, and
really over the top.
it really is, and some people predict that that's gonna crash, and some people say it'll never end, and just like the markets, we have no idea what's gonna come in the future as far as car prices.
Yeah. Whenever somebody says never come down, that's when I run because I don't want it to fall on me uh, and that person. All right, so buy an affordable car that's right for your budget. If you
Mhm.
can pay cash, all the better. But just remember, folks, it's from to get you from point A to point B. There's absolutely nothing wrong with buying a very nice, expensive car if you can afford it and you pay
Right,
for it.
right.
$2,000 a month car payment is not a good use of money. I don't care who you are. That's not a good use of money. He had to
Agreed.
be paying a really outrageous interest rate.
I think it was 18%.
Yeah, see that's right there. That tells you he doesn't have a good financial picture because his credit's bad.
Well, they
Uh,
think he's gonna make 2 payments and then run. They're gonna have to collect the car.
Probably so. Probably so.
Yeah.
All right. So this next one, Jesse, a big money waster, is kind of touchy for some parents. All right. It's spending money on adult children for things that your adult children who are gainfully employed, or even if they're not gainfully employed, should be paying for.
Mhm.
One of the biggest ones we see a lot of, Jesse, is cell phones.
Right.
I have talked to people in the past, and their adult children are in their 40s. They might be doctors. They might be lawyers, and they're still on their parents' cell phone plan. Okay.
So, Mark, you're gonna be happy to hear this. When I, um, exited college, my parents the alternative that they found was to keep me on their plan, but my mom made me pay her every month the cost of my phone.
Okay, that's great.
Yeah.
So you're not dependent upon mom and dad. Your mom and dad are not enabling you. You are paying for it. But we
Mhm.
see people all the time. They're making car payments for the kids, paying their rent, because they're having a little tough time. Well, folks, their tough time is not your problem. And I don't want to sound callous, but we see far too many folks that are approaching retirement that want to retire, but half their monthly income is not going towards savings. It's going to prop up their adult children who have become dependent upon mom and dad all
Mhm.
throughout their life. So here's another one, Jesse. And I see this a lot. I talked to a friend the other day, and it's a divorce situation, and they've got the child scheduled in like 7 different sports at a time. He was doing tennis, flag football, soccer, uh, taekwondo, all these different things at one time. And that's costly. We've had to go to a situation where we said, okay, kids, you can play 2 sports a year. What's it going to be? We're not
Mhm.
doing everything because you end up being a chauffeur for your kids running around the place. So make sure you're not over scheduling your kids into a lot of extracurricular activities because transportation costs are rising. The cost of those things are going up. But you know what? I had just as much fun playing sandlot baseball or football with my neighborhood kids as I did playing an organized sport.
Mhm.
Uh, that's a whole lot cheaper and it's easy to pick up a game. So speaking of physical stuff, Jesse, what about gym memberships? I may be guilty of this. I can't tell you what the front door of the gym looks like, but I do have a membership.
Yeah, if you're not gonna use it, then don't pay for it, and everybody wants to say, "Oh, I'll go," but unused gym memberships can add up to hundreds of dollars per year or more,
Yeah, and
and it's
because
just
you forget
ghost
about them,
money.
right?
Yeah,
You
it's
know?
just ghost money that ends up leaving your bank account.
That's right. And here's one other final big money waster. We see this a lot. Unplanned trips to the grocery store.
Right.
Now, we get lots of stories from people when they're talking about their spending plan and stuff. And we were talking with a couple one time. They have 3 people in their family, had a teenage child, and they spent roughly on their grocery store budget almost $2,000 a month. And you're thinking, wow, that's amazing. Do you like make a list? Oh no, we go every day.
Are you eating
And
filet every night?
well, it wasn't they were eating filet every night. They'd go to the store whenever they were hungry, and they wouldn't plan ahead, and so they end up buying things they didn't need. And so that one little item that they went in to get can really add up to quite a bit. So make a
Mhm.
list. Go
Right.
once a week. Don't go when you're hungry to the grocery store. Well, folks, we're wrapping up the end of our show. We appreciate you listening today. We have ask that you have a blessed week. And with God willing, we will be back next week. Thank you for listening to the Spin Life Well Show.